Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the show. So please keep commenting on our feed. We'll have your questions addressed later on in the show. But before we kickstart, let's see what the global handover looks like. There was weaker than expected retail sales data, which raised the fears that the Fed is pushing the US economy into a recession. Wall Street sees its worst day in 3 months as Dow plunges more than 750 points. Nasdaq sheds more than 3%. Asia markets also trade lower. SGX Nifty 2 signals a weak start for the Indian market. European stocks close over 2% lower as ECB signals significant rate hikes still to come. With the ECB acting far more hawkish than the US Fed and the diverging of US and European financial conditions, what could be in store for EMs? We take the global view. Individual stocks in focus today are Nykaa, Sapphire Foods, HDFC AMC, Deepak Fertilisers and GMM Pfaudler. Okay, let's get going and talk technicals with Raja Venkatraman of Neo Trader. Hi Raja, good morning. Do you think the Santa rally is over well ahead of Christmas?
Yeah, good morning, Karunya. Yes, we always expect a Santa Claus rally in December. That's when the FIs take their yearly off and, Indian markets are left to do their own thing. But what's really happened now is that like you rightly said, maybe we have already had the rally much earlier in December. And I have been mentioning about strong resistance zones around the 19,000 zone. And that's where I'm seeing from the option data as well that a lot of call writing is happening. Plus, there were a lot of resistance zones which were emerging at higher levels. And that has actually dragged the indices lower, and especially triggered by the global cues, which has emerged from yesterday's Fed action. And one of the key interest in the indices was the movement in Bank Nifty that we saw at the start of the week. But then what has really transpired is that Bank Nifty too tread into some strong resistance zones. And we have seen a sharp sell-off yesterday. And the way the Asian markets have opened today, it looks like the downward saga could continue. But the heartening factor is that the market continues to be a buy on dip approach. So right now what I'm seeing is we may expect a trade into some support zones around, if you take the Nifty, it will be in the region of around 18,300. And if you take Bank Nifty, it will be closer to the region of 43,200 to 43,300. So that would be a good support zones to watch out for as we head out into the day. And if the market holds out the first half an hour of the day and it gives a range movement above the first half an hour of the day, I would definitely be a buyer on the indices.
Okay, all right. That's an interesting point that you've shared. Let's also talk about some stocks in news. Lots of news flow coming in fact, especially if we look at bulk deals. Let's talk about Nykaa first and foremost. Again, fairly new entrant in the market. I'm sure there's only limited historic pattern for you to track, but Nykaa definitely is something that a lot of retail investors are still interested in, maybe those who bought in the IPO or in subsequent weeks. Kravis Investment Partners has offloaded 630 crore worth of shares in the company by offloading 3.7 crore shares. They were sold at an average price of 171 rupees a piece. Now, Raja, given the significant, scaling back that we've seen in the stock price, the erosion that we've seen in the stock price, is now finally a time to enter, or should one still stay cautious?
Yeah, if you see the history of Nykaa ever since its debut in last November, the prices have gone down by more than 70%. And one of the primary reasons have been it's almost nearing 70% decline from the highs. So what does it signify? It signifies that no one is really interested in its movement, upward movement, and every possible opportunity is used to exit. At such juncture, I would not advocate a buy here, rather an exit if you're having an existing holding, because the things doesn't seem to be looking any better despite any semblance of some positive news coming in.
Okay. The next name is Sapphire Foods. That's on our list. Again, a very sluggish and flattish move last 1 month. Here, the promoter has sold 6.1% stake at a price of 1347 rupees. However, you've had some interesting investors who have entered the stock, the likes of PI Opportunities Fund, Mirai Asset Mutual Fund. Now, they have bought close to 41 lakh shares in the company. Talk to us about Sapphire Foods and given the slow move and the sluggishness, do you think that could change in the coming few weeks?
The consumer space itself is going through a very rough patch, and right now, whatever rise which we are seeing is quite momentary. So, considering that scenario, the movement in Sapphire Foods needs to tread above 1500 for any kind of positive traction to emerge. But overall, the stock seems to be holding on to the higher levels, which is an indication of some good positive momentum. So, if one needs to invest into Sapphire Foods, it would be above 1500.
Okay. I want to flag off another underperformer in the market, which is HDFC AMC, and that's also likely to be in the limelight on back of bulk deal. LIC has raised their stake. They've bought additional 2% in HDFC AMC. So now their total overall shareholding in HDFC AMC stands at 9%. Now, HDFC AMC has been an avoid for most guests we've spoken to in the last 4-5 months. Do you have a different view?
So, HDFC AMC, yes, it is showing some hint of recovery out here. And I would definitely be a buyer in HDFC AMC. You could expect a upward drive towards 2500 within the next 3 months. And overall, the setup seems to be encouraging for an upside.
Okay, all right. What about GMM Pfaudler? Now, what we are given to understand is that the promoter is looking to sell close to 29.9% stake. 1.34 crore shares will be at stake via a block deal. Floor price has reportedly been set at 1700 rupees a piece. How's GMM Pfaudler looking on the chart?
Yeah, currently GMM Pfaudler has moved to its September 2020 high, which is almost, if you take its last 2 years high, which was around 2100. Now at this juncture, this kind of news could definitely set some ball rolling on the downside. And what I expect is the floor price, which has been mentioned, is an ideal support zone, and probably the prices could tread towards the support zone.
Okay, all right, understood. And the final name on our list is Deepak Fertilisers. Again, another stock that's in the news today. They've announced a demerger of their mining chemicals business and their fertilizer business. So they basically will be demerging TAN business from Smart Chem Tech to Deepak Mining Services. And they will also merge Mahadan Farm Tech with Smart Chem Tech. So some internal restructuring taking place there, and of course the demerger of these two main businesses. Now, how's Deepak Fertilizer looking technically?
The specialty chemical space has been fantastic, and the fertilizers, especially Deepak Fertilizer, has had a dream run in the last 2 years. The prices have really gone up 10x, and what I feel is that there is still more steam left in the stock. And like you rightly said, the demerger and internal restructuring which is happening is a sign of significant growth. So if you combine the fundamentals along with the price action, it clearly spells more room for upside. And right now the price have, after its strong show till October, the price have given a good reaction now, and this could be a good area to buy into.
Okay. In fact, we're getting some questions as well from the agro and chemical space right now. One is on Coromandel International. Rohit has bought it at 966 rupees. Prabhu is also writing to us and wants to know your view on GNFC. So how are these stacked against Deepak?
Yeah, when you see the kind of movements between Coromandel International or GNFC, GNFC is a very volatile stock. So what one needs to definitely factor in while participating in stocks like GNFC is that it is a very good counter to buy on dips. And after its strong surge in the month of April, the price have been in a correcting phase. So I would not advocate GNFC at this moment. In comparison, Coromandel has come into some strong set of supports. So if you are really looking to buy into this sector, then I would prefer Coromandel, between Coromandel and GNFC. Now, if you take a comparison between Coromandel, GNFC, and Deepak, Deepak is in a much better state because the momentum is also showing some hints of further upward traction. So I would put Deepak at number 1, Coromandel at number 2, and GNFC an avoid.
Okay, all right. I hope our viewers have taken note about all of the three names. Now, moving on to some more questions and queries coming from our viewers. Trilok is asking your view on banking stocks and is it the right time to buy? Any names that are still looking attractive despite all the run-up that we've seen in banking names?
Yeah, what I would advise all the viewers is that if you're going to participate in any banking names right now, the first thing is you're late to the party. So I would advise that you wait along the sidelines and see what's really happening to the market, because I envisage that the market could now enter into a range. And in such a scenario, if you're looking from a trading aspect, then it's a different scenario. But if you're looking from an investing, say a short-term play or a momentum play, then this is not a good time to enter the banking stocks.
Okay, all right. Moving on to the next query. This is from Raja and he wants to know about DLF's share price. Again, very flattish moves. Last 1 month, it hasn't done much. I mean, we did see a small spike, but it wasn't able to hold on to that. What lies ahead, according to you?
Yeah, the real estate sector movement in the banking space as well, because they are associated as far as the rates are concerned. So now what has happened in DLF is that it is struggling to move to the upside, and it would continue to attract some supply zone around the 430 levels. So this would not be a good time to buy into DLF. In fact, if it corrects from here, it could face some sharp decline. So if you are a trader, say an intraday or a multi-day trader, say a 2-3 days kind of a trade, then you are actually looking at some selling opportunity emerging in DLF once it travels below 390.
Okay, all right. I want to shift your focus to forging sector stocks as well. Kishore wants to know your view on RK Forging. Interesting uptake seen last 1 week there. I think 10-11% added on the upside. Can the trajectory sustain?
See, RK Forging has shown some very strong drive in the last 6 months, and the prices have almost gone up by around 60 to 70%. The primary reason have been that there have been some cool off in the metal prices, and that has helped this company as a whole. But what we are seeing right now is there could be a reaction to lower levels somewhere in the region of around 225 to 230 could be a good zone to buy into with a stop loss below 210, because upside I'm seeing in the stock is to the region of 350 within the next 6 months.
Okay, noted. How is Reliance Industries looking? Krishna Arjun is writing to us and he wants your view there. Now, again, very lackluster last not only 1 month, but if we look at the 6-month chart also, the returns have been rather flattish. What do you think is in store for Reliance Industries in the next few weeks or perhaps months?
Yeah. So what I personally feel is that Reliance is a stock where you cannot consider it in terms of number of days or number of weeks. You have to hold it for a number of months so that you can make some return out of the same. Otherwise, what you will continue to see is a very range-bound action and some sudden spurt. So essentially, it is a stock where you have to invest and forget it. So if you are having the capital where you can invest and forget it, then go for Reliance. Otherwise, there are many better opportunities out there today in the markets.
Okay, all right. Moving on, Deep is writing to us and he wants to know about Zensar Technologies chart. Again, we've seen IT stocks taking it on the chin most part of this year, whether it's large cap or mid cap, and now Zensar is no different. Can things turn around for it in the next few weeks, medium term perhaps, if not near term?
Yeah, in the last so many shows, whenever we have interacted, I've always maintained that IT will continue to experience a sell-off this entire year. So this entire year, I have managed to remain on the right side of my view that the IT will continue to experience a lot of selling pressure. So my advice was to exit IT stocks, and currently you're talking about Zensar. Zensar is about to see a major sell-off once it moves below 209. So if you're having a position, 209 would be your exit clause. Otherwise, if you're looking to invest, then look for some other better bet.
Okay. How's CESC? Arun is writing to us. Now again, the last 1 week we've seen some momentum building in on that counter. But is it a meaningful sort of a recovery or a rebound, or is it something more of a non-event and it could once again go back into slumber?
Yeah, so right now it is trying to challenge its higher levels around 85 levels. And considering the market scenario, it could remain a challenge once it gives a really good closing above 85. That is when we should really consider it. Otherwise, it's an avoid.
Okay, all right. Quickly, then the final query of today, I want to flag off from Nilesh. He wants to know your view on Metro Brands. Exciting space, footwear. We at MC Pro have been quite optimistic, specifically, in Metro Brands. But on the technical side, do you think it's equally poised for a good trajectory, upward trajectory?
Yeah, see, Metro Brands right now is in a space, like we said at the start of the show, the FMCG, the consumer space is really going through some sluggish times. There are a lot of uncertainty which has been built in. But having said that, when you take a look at the kind of movement which we have seen in the last few weeks, it is clearly saying that there is some positive trends to emerge from here. And if you're looking to invest into this counter, then you should wait for a move above 900, because from there on, it would set off a very positive move. So it is definitely, it can be on a tracking list, but definitely not on your trading list.
Okay. So, Raja, tell us what is on your trading list for the day and for the coming few weeks. Which stocks look exciting?
Yeah, so what I'm looking at is some positive as well as some negative move today. So if you consider today, it could continue to remain dicey. But then yesterday too, we saw that some stocks really managed to pull up their stocks and do well as well. So what I've done is I'm giving a combination of recommendation where I would look to buy PEL at current levels with a stop at 900 for a target of 935 to 945. And at the same time, I will have a sell-off in IT where I would like to sell Infi around 1543. Stop at 1560 for a target towards 1520 to 1510.
Okay, so a buy on PEL, sell on Infosys. So with that, Raja, thanks much for joining in and sharing your observations and your thoughts on the market with us. We're going to wrap it up right here on Morning Trade. Thank you for tuning in.